Hello, ladies and gentlemen. Good morning to you. It's 12 to 5 degrees Celsius from this part of the world. It's a little bit chilly and a little bit of peep from the sun in the sky. How are you all doing today? I'm very grateful to be alive and to be with you this morning. Let's confirm that we are good to go. So if you can see my screen and you can hear my voice clearly without distortion, please let me know in the comment section. And by typing hi, I get to know that we are good to go this morning. So I would like to see some feedback, please, in the comment section. I'm trying to load up my comment box right now. And let's get the party started. So I would like to see some feedback, please. If you can see my screen and you can hear my voice clearly, please type in hi in the comment section, as this will help me confirm that I can proceed with the live session. Okay, I can see 2748. Thank you very much. 8818. I'm not sure what you're trying to type here. Susie MB, thank you very much. A Carrie, good morning. Thank you very much for that confirmation. All right, so let's take this as a positive feedback that we are good to go. And if there are any issues along the line, please let me know quickly so that I can do the appropriate adjustment to make our experience better. My name is Sharif Daramola, and for the next 1 hour, I'm going to be your host, where we shall be evaluating the financial market from a comprehensive price action based technical standpoint. And we shall be diving into an insightful analysis of all the financial instruments that we have been monitoring since the beginning of the week. In fact, we have 5 financial instruments that we have been deliberating on since the beginning of the week, and these are the US All Spots, the Gold Spot, the USTech100, GBPUSD, and of course the USDJPY. And across this instrument, we have been recording some significant amount of profit. So far so good this week. So we are going to be reviewing how well the financial instruments have been doing so far, while we also look forward to position ourselves strategically ahead of the New York session today on this instrument. And for those who are joining us for the first time, you are highly welcome. I'm so always glad and grateful to have newcomers in the house. And what we simply do here on a daily basis is to come together as a community, gathering in anticipation of both of the New York session. And during this time, we will be reviewing and managing our current positions, while we also aim to position ourselves strategically for today's trading session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. So I implore you to stay tuned in and try to be in our subsequent session, as the more time you spend here, you will eventually be able to use the information you have gathered here to make your independent decision on your account. So once again, you are highly welcome on board. So with that being said, let's dive right into the business for today. And as usual, you know how we do it in this community. The first thing we want to be doing is to check on the economic calendar. And as you all know, these fundamental factors often manifest on the charts in technical patterns and price movements. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns. Now, from the economic calendar, we shall be filtering and going into the high impact event, which will be affecting the the currencies on our watch list for the week. And these are from the US economy the Japanese economy, and of course the pounds, the UK's economy. So for today, Thursday, June 29, I was able to come up with three high impact events for today, which one of it have already been have already happened, and that is the first chairman speech, which happened a couple of hours ago. And then we have the GDP, gross domestic product annualized for quarter one, which will be coming up in about an hour from now. And this is normally released by the US Bureau of Economic Analysis, and this index shows the monetary value of all the goods, services, and structures produced within the US economy during this specific period of time. And this data indicates the pace at which a country's economy is growing or decreasing. And of course, a high reading or a better than expected number is seen as a positive signal for the US dollar, while a low reading is seen as negative. And from the data we have here, the previous data came in at 1.3%, and there is a consensus projection here that projects that it's still going to remain the same as 1.3%. So we are going to be looking forward to what this actual data will be in an hour from now. How is it going to be just as expected, below expectation, or even beyond expectation? Then later in the day, we are going to be witnessing the consumer price index from the Japanese economic docket, and this is released by the Statistic Bureau, and it is a measure of price movement obtained by comparison of the retail prices of a representative shopping basket of goods and services. This index normally captures the inflation in Japan, so it is the most significant way to measure changes in purchasing trend. So we are going to be looking forward to what the actual data is going to be like. As the previous data came in at 3.2% for the month of May, and for the month of June, there is a general consensus that we're going to be seeing a 3.8%, which is on the high side. So we are going to be looking forward to what the actual data is going to be like. So we are going to be looking at the chart now from a technical standpoint to see how the market will be anticipating this event from a price action based technical analysis. So with that being said, here we shall be diving right into the business for today. And as usual, the first instrument we are going to be taking on today is going to be the US Oil Spot. And in fact, in the last 24 hours, it has been quite a profitable scenario that we have here as price action gained some significant bullish momentum in the last 24 hours, hereby giving us over 100 pips in profit at this particular point in time. And for those who took advantage of this opportunity, well done to you for being on standby to capture the breakout of that $68.20 level. So let's quickly run through how the week started for us so that we can have an idea of where we are coming from and anticipation of where we are likely going to be going for today. So at the beginning of the week, we initially identified the oscillation of price action around our key level. Remember, we identified a key level at the $69.50 level, where we said we are going to be using it to guide our trading activity for this week. And you know how we use our key levels in this community. It helps us to position ourselves in such a way that we can identify buy or selling opportunities. So if price action remains above the key level, we definitely want to be looking out for patterns and structures that will be supporting the opportunity to buy. While price action remain below the key level is a sign that we want to be looking out for structures and patterns that will support a bearish momentum. And at the beginning of the week, we acknowledged this range where price action was caught within the $70 level and of course the $69 level to give us an insight into the level of indecision in this market. And you know how we do it whenever we have this kind of simple setup. We want to wait patiently for price action to either break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And coupled with this structure, we had a an ascending trend line after we connected a series of higher lows, and we were thinking that price action will continue to the upside, where a breakout of the $70 level retest of structure will give us an opportunity to buy. But as you can see, unfortunately for the buyers, we saw how price action broke down that trend line on Tuesday to give the signal to start selling the USTech100. So with the breakdown retest of that trend line and with a sell stop order sitting below that our weekly key level at the $69.50 level, we were able to capture a selling opportunity at that point, and then we added more positions at the breakdown retest of that $69 level to maximize the potential of that bearish move. And in fact, we saw our price action move significantly in our favor. On the first position, we had over 200 pips, and the second position, we had over 140 pips on that one. So as at the first half of the week, we were already profitable on the US All Spot, as we were able to scoop over 200 pips after price action took us out. We moved our stop losses accordingly to lock in profit, and so we were already profitable on that one. Then during the live session yesterday, we acknowledged this whole consolidation phase between the $68.20 level and the $67.50 area, which was a sign there was a little bit of indecision around that area. And coupled with the fact that price action was sitting on a very, very strong demand zone, we were open to the idea of buying the US All Spot. And let me share with you what really did happen on the 4 hours time frame, as this will give us an holistic perspective into what is really going on in this market. So right here on the 4 hours time frame, this was what we saw at the beginning of the week. We initially identified the fact that price action was ranging between the $73.50 level and the $67.50 area to emphasize the level of indecision here. And one interesting thing about the structure was that $67.50 level. As you can see, this area has been a very strong demand zone since the beginning of the month. As you can see how sellers found it difficult to break through the structure. We saw what happened here at the beginning of the month. We saw buy pressure. We saw again during the second week of the month, we saw buy pressure around this area. And during the course of last week's trading session, we saw a sharp rejection of that same zone. And during the last 24 hours here, we saw our price action fell into a consolidation phase just right above that demand zone, which was a clear sign that we might likely be seeing an opportunity to buy if price action breaks out of that $68.20 level that we identified right here. So with the situation here, it was more reasonable that we want to be looking out for buying opportunity yesterday, unless the market stated otherwise. And I told you that the only thing that we will see here to make us to sell the US All Spot was for price action to break down that $67.50 level, retest of structure to push price to the downside. Now, going back into the 1 hour time frame, I just needed to show you what was going on the higher time frame so that we can have a better idea into what is really going on there. So now we saw the situation where price action finally broke out of the $68.20 level to trigger our second buy position for the week, as we were able to ride the move all the way to the upside. And remember, I told us yesterday that we have the privilege of maximizing the potential of this move if price action goes on to break out of the $69 level, where we already placed a buy stop order to maximize this move. And if you are taking advantage of that one too, well done to you for being on standby to catch that move. So for the first position right now, that is, if you still have a buy position running, you will currently be having about 140 pips in profit on that first position, while the second position at the breakout of the $69 level will currently be running with about 70 pips in profit. So roughly approximately over 200 pips in profit at this point in time. So well done to you for being on standby to have caught this opportunity. Now, next thing we want to be doing right now, you know how we do it in this community. As soon as price action moves significantly well in our favor, the next thing we want to be doing is to move our stop losses to secure this current buy position. And from the look of things here, for the fact that price still remains above this trend line that we have here, I will be suggesting that anywhere below this trend line will be where our stop loss is going to be at this point. And since we want to give room for price action to break, so I would suggest that anywhere below the $69.40 area and the $68.90 level seems most appropriate to lock in the profit here. Of course, we want to give room for price action to breed with the anticipation that we could have a retest of structure to incite another wave of bullish momentum. So now, with our positions well secured right now, what is going to be our next line of action for today? So this morning I had a new structure which I identified here, and that is this trend line which we are going to be using as a parameter to guide our trading activity for today. Now, this trend line was as a result of identifying these structures, this pivot lows and pivot highs, which has been a major determinant of price action since the beginning of this week. So we saw how this level here was a demand zone at one point. Then we saw the breakdown retest here. We saw this area as a selling niche before we finally saw the breakout of the structure during the New York session yesterday. And since price action broke out of the structure, you can see that price still remains above that trend line. So what this simply means is that as long as price action remains above this trend line, we are going to be looking out for more opportunities to buy the US oil spot, while we also remain comfortable in our buy position for today. Now, the US oil has been rising in the last couple of days now, and there is a fundamental factor behind that. And we just learned yesterday that the EIA recorded the lowest reduction in oil storage for the US, and this was a clear sign that we might likely be seeing some high demand for oil going forward. And considering the fact that we are in the summer season, which is peculiar with traveling, the demand of oil is likely going to rise. So what we are going to be looking forward to here is the potential of price action breaking out that $70 barrier for the first time in the last 1 week. So if that happens here, we definitely want to be part of another wave of bullish momentum. So we are going to be having a buy stop order above that structure. Please mind you, for those who already have buy position are those who can have the leverage to risk waters around that area to position for a buy position. So since we already been profitable here, we could afford to risk some of the profit we have made so far this week on taking advantage of that buy position above that area. But if you did not take this opportunity here, well, I will suggest that you hold on for a breakout to happen, then scale down to your lower time frame where we want to look out for a retest of structure, reversal patterns, signs that sellers are finding it difficult to drop back below the trend line. Then at this point, we want to be joining a bullish move to the upside. And one thing about this level is that it has been a very, very strong selling niche since the beginning of the week. As you can see, at every point in time buyers have tried to break out of the structure, it has been met with strong resistance from the sellers, as you can see here. And the same thing also happened a couple of hours ago around that structure. So we need to be very, very careful, as we could still have the potentials of sellers come in and manifest in form of a breakdown of key structures. So in that regard, since we are looking out for buying opportunity here, we will also want to take into consideration the potentials of sellers too as well. So what do we want to see on this chart that will make us to sell the US all spot for today? Well, personally, for me, considering the current market structure we have here, I still maintain on using this trend line as our yardstick to guide our selling opportunities in this market. So if price action does not break out of the $70 area, but instead continues to find lower lows and lower highs, leading to the breakdown of this trend line, then at this point, we want to start considering selling the US all spot. And one interesting thing about this trend line is the fact that it also shares a confluence with our key level situated at the $69.50 level. And you know how we use our key level in this community. When price action drops below the key level, of course, we want to start looking out for selling opportunity. And if you look at what has been happening below the key level since the beginning of the week, you can see we've been witnessing selling pressure below that key level since the beginning of the week. So if price drops back below the key level and the trend line, then we are back within this seller's territory. Now, if a breakdown happens, remember, we are not getting too excited. We don't want to jump into any sell position right away, so we are not having a sell stop order in this case scenario, but instead we want to scale down into our lower time frame to look out for confirmations that sellers are gradually gaining momentum. So we want to see something on the chart like a retest of either the trend line on the $69.50 level, where continued selling pressure below the structure will give us the opportunity to join a bearish move. And if price action continues to the downside, breaking down the $69 level, where we shall be having a sell stop order to maximize the potential of this move. So this is how we are going to be selling the US all spot today. So unless price action breaks down both the trend line and the $69.50 level, we are not going to be thinking of selling the US all spot. So for today, it's still looking very bearish as long as price remains above that trend line and the $69.50 level, where we shall be looking out for opportunities above the $70 mark to maximize the potential of this move. So that is how we are going to be managing our positions on the US all spot for today. If you have any questions, feel free to let me know in the comment section as usual. And I'll be taking the next 10 to 15 seconds to see if there are any questions whatsoever. And you can also use that time frame to mark out these key levels on your chart or screenshot my screen if you want to, so that you can use it as a reference point when you're about to make your independent decision on your account. So in the absence of no questions, I want to assume that we're on the same page here. So in that regard, I will be moving on to the next instrument. So the next instrument on our watch list for today is the USTech100. Now on the USTech100, another profitable position we have here ongoing at this particular point in time, as we saw how price action has been finding higher highs and higher lows presently in the last 24 hours. But before we go into the details on that one, let's quickly run through what our expectations was looking like at the beginning of the week and what structure we saw and how we have been managing this trade since the week began. So here we are on the 1 hour time frame. And the first thing we observed on the higher time frame, of course, was this $15,000 level, which was supposed to be serving as our key level for the week. And you know how we use key levels in this community. Price remaining below the key level was a good scenario for us to look out for selling opportunities. And throughout the first half of this week, we noticed that price action remained below the key level, which gave us an opportunity to sell. And in addition to that key level, we spotted this range at the beginning of the week where price action was caught within that $15,000 mark and the 14,890 level to give us a flat channel to work with. And with the breakdown of the flat channel, that was our first signal that sellers might likely be dictating the pace for this week. Then we saw price come back to retest structure, and we joined the bearish move below the 14,890 as we rode that move all the way to the downside. And in fact, we had price action move over 200 pips on the first position, and we had the privilege of maximizing this move as we added more opportunities, had the breakdown of the 14,800 to give us about 120 pips before this bullish momentum began. So we were able to scoop close to 300 pips on the USTech100 during the first half of the week. Then on Tuesday, we acknowledged this trend line after connecting the series of lower highs, and we said here that as long as price remains below the trend line, we shall continue to look out for selling opportunities, and we are only buying if price action breaks out this trend line. And this was exactly what happened on Tuesday. I think a couple of hours into the New York session, we saw the breakout of the structure, which triggered our buy position, and since then we have been riding this move all the way to the upside. So since the 14,800 level was triggered here, you can see if you still have a buy position running right now, you will currently be running with over 200 pips in profit on that one. And remember, we had the privilege of adding more position to our existing trade. If you recall vividly, during our live session yesterday, we acknowledged this range between the 14,910 and the 14,850, giving us an insight into the level of indecision at that point. And one thing we said here yesterday is that we are going to wait patiently for either a breakdown retest of the structure to sell, or wait for price action to break out, retest of the resistance line at the 14,910 level to incite an opportunity to buy. And as you can see what happened, we saw price break out. So even if you had missed out on this opportunity, the market presented another chance as we saw a retest of structure multiple times, in fact, to incite this second wave of bullish momentum. So we had the privilege of joining more positions above the 14,910 level, and I told us all yesterday that if price action continues to climb to the upside, a further breakout of our key level at the $15,000 mark will be welcoming more opportunities here. So at this particular point in time, we have a minimum of 3 positions running. The first one at the 14,800. Then we had the second one at the breakout of the 14,900, and we had a third one here had the breakout of the $15,000 mark. So it has been quite a profitable trade for us since the beginning of this week. And for those who are taking advantage of these opportunities, well done to you for being on standby to have caught this move. And if you still have your buy position running at this point, it is quite reasonable that you want to be moving your stop losses, as we always do, to secure the current buy position, as we don't want to lose out on the profit we had made so far. So right now, where is the most appropriate zone to move all stop losses to? Well, based on the current structure, we have a previous low here around the 14,950, and of course we want to give room for price action to breed, so I will be suggesting between the 14,970 and the 14,940 as an area you want to be moving all stop losses to at this particular point in time, while we wait out and see if this momentum will still continue to the upside. Now, with our positions well secured at this point and in anticipation of the New York session, what is going to be our plan? How do we intend to join this? Are we still going to be buying the USTech100, or are we going to be getting ready to sell the USTech100? Well, the first thing I would like us to do here is to acknowledge the highest point price action has been for this week, which falls exactly at around the $15,050 level, a psychological level there, considering the round figure of that price. So we have the $15,050 area. That is the highest point price action has been for this week, and obviously we want to be seeing a breakout of this highest point for more opportunities to buy the USTech 100. Now, in addition to that, remember we have been noticing higher lows since the beginning of this week, emphasizing the strength of the buyers. So the next thing we want to be doing now is to acknowledge the higher lows here by connecting these lows together. So if we do that correctly, we should be having something like this, which will definitely be one of the yardstick we are going to be using to guide our trading activity for today. So I would like to thicken this a little bit to emphasize its importance at this juncture. Then we'll do some little adjustment while we bring back our candle chart, and then readjust it to capture most of the pivot lows here. So beautiful. Now we have a trend line to work with for today. So what this simply means is that as long as price action remains above the trend line, we'll feel comfortable in our buy position while we also look out for more opportunities to buy. So at this point in time, I'm suggesting that we have a buy stop order. This is especially for those who already profitable on the USTech 100, so we can still leverage on the profit we had made so far this week to test waters around that $15,050 area to maximize the potential of this bullish move to the upside. So that is what we are going to be looking at on the USTech 100 today. So it's still looking very bullish here. So we continue to maintain a bullish bias on this instrument. However, you know how we do it in this community. We also want to keep tabs with the potentials of sellers too as well. And for the fact that we have witnessed some selling pressure around that 15,050 during the later part of the New York session yesterday, and since yesterday we are yet to see price action find a new high, break out of the previous high here. So it's a clear sign that sellers are still very present here and buyers are trying as much as possible to gain that momentum to break through that level. So in as much as we have this kind of situation, we cannot ignore the potentials of sellers. So now what do we want to see on this chart that will make us consider selling and negating the idea of buying the USTech 100? Well, we have a trend line, of course, which we identified earlier, and we have our key level along, hold on a second, we have our trend line here, and then we have our key level along that $15,000 mark, a strong psychological level considering the round figure of that price to guide our trading activity for today. So if price action at any point in time today breaks down both of the structures, then we have no choice than to start thinking of selling the USTech 100. So if we cite a breakdown of the structure, remember, we are not getting too excited. We are not jumping right in. So we don't have a sell stop yet. This is a very, very strong bullish momentum since the beginning of this week. And of course, we want to wait for confirmations to happen before we want to join any bearish move here. So we want to see signs that sellers are gradually gaining momentum. And in that regard, we shall scale down into our lower time frame as soon as the breakdown of that structure happens. We want to see something like a retest of either the key level at the $15,000 mark or the trend line here, where the continued selling pressure here reveals that buyers are finding it difficult to climb back above the structure, after which we want to be joining a bearish move to the downside. So this is how we are going to be selling the USTech 100 for today. So let's keep this in mind. Mark these levels out on our chart. So as long as price action remains above the structure, we definitely want to remain bullish. But if a breakdown of the structure happens today, we are going to be getting ready to sell. So you can see the importance of the $15,000 mark and that ascending trend line we identify here. So these are the major parameters we are going to be using to guide our trading activity today. Then mark out the 15,050 where we are waiting for a breakout retest of that level for more buying opportunities in this market. So that is my view here on the USTech 100 for today. If you have any questions, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to give you room to mark out this level and at the same time open up for questions and let's see what happens for the next 10 to 15 seconds. Then if there are no questions, we'll just move. All right, so in the absence of no questions, I want to assume that we're on the same page. So hope you have marked your levels out. So we shall be moving on to the next instrument for today. Okay, I can see some comments already. 345, good morning, thank you very much. 75755, thumbs up to you too, thank you. Dino, good morning. Jack Racentis, good morning, thank you for checking in. 8604, 4354 and 8726, good morning to you guys, thank you for checking in. I really do appreciate your gestures. All right, so with that being said, here we shall be moving right into the next instrument for today. And the next instrument we are going to be looking at today is, of course, the GBPUSD. Now, on the GBPUSD, we also have a very interesting situation going on here. And in fact, in the last 24 hours, we have been very, 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 very profitable on this instrument. Remember, yesterday we were looking out for selling opportunities in this market, and we've been selling since the early hours of yesterday. And right into the live session yesterday, we were actually anticipating a further breakdown retest of the 1.2700 level to join and maximize the potential of that bearish move. And as you can see, price action dropped significantly well in our favor as we rode that move all the way to the downside, hitting the TP target at the 1.26100 level. In fact, we had from here, I had about over 120 pips in profit on this one, and below the 1.271 we had over 100 pips, making 200 pips in total. And then below the 1.27 level, which happens to be our key level, we had about 90 pips. So we had a roughly 300 pips in profit on the GBPUSD minimum in the last 3 days in this market. So well done and kudos to you for being on standby to have caught this opportunity. So right now, if you still have a sell position right now, I will advise you to close your positions right now, as we are gradually seeing a new setup evolve at this particular point in time. So with that being said here, let's look at what our expectation is going to be looking like for today. Well, first of all, we want to acknowledge the descending trend line, which we identified yesterday, which we said is going to be our yardstick to guide trading activity for this week. So after connecting the series of lower highs at the beginning of the week, we had this trend line figured out. So you want to have that level marked out on your chart. Then, since price action tested the 1.26100 level during the New York session yesterday, we saw something interesting happen in this market. We saw how price action fell into a range where it was trading between the 1.26500 and the 1.26100 level. And in fact, with the situation we have here, you will see that price action has since been finding higher lows in this market. So this is the lowest point price action has gotten to this week. Then the next one we see here was a higher low, which is a sign that buyers are gradually gaining momentum at this particular point in time, and the potential of this range evolving into a reversal pattern hereby increases with the appearance of this higher low at this juncture in the market. So how do we intend to maximize the potential of any possibilities around this area? Well, the first thing I would like to say here is that Remember that whenever we have a flat channel like this, we always want to wait for price action to break out of the structure to give us an idea of where price action is likely going to be going for today. And one of the things we are going to be expecting is either price action breaks down the support line at the 1.26100 level to give us an opportunity to sell, or the breakout of the 1.26500 area to give us an opportunity to buy. Now, if we take into consideration the impulsive move that brought us into this point before we started seeing this old choppy situation, we could see price action transition into what looks like a reversal pattern in the form of a double bottom structure. And for the fact that we have price action transitioning into what looks like a reversal pattern, you know the next thing we want to be doing is to identify the neckline of this pattern to help us validate the potency of this double bottom structure. So now we have a neckline which coincidentally falls along the resistance line of that range we identified earlier, sitting at the 1.26500 area. And at this point in time, a breakout of this neckline will be what we are looking for to confirm this reversal pattern. And from what we are seeing right now, it appears we have a breakout of structure at this point, but we can't say for sure that this is a true breakout, as this candle is still currently running and it still has about 15 minutes to go, so we can't conclude this is a true breakout yet, as it could still turn out to be a shooting star candle, which is a sign that sellers are still very present in this market. So what we are going to be doing right now is to remain patient around this area. We have what we want to see at this point is a breakout retest of the structure with continued buy pressure around or above the 1.26500 level to give us a confirmation that we can now go bullish on this one. Now, there's a caveat to this buy expectation around this juncture, and that is the fact that a bullish opportunity here is going to be more or less seen as a counter trend opportunity. Remember, we have a trend line here which we identified at the beginning of the week, which still extends into this area. And for the fact that price action still remains below the trend line, it is very, very possible that sellers could still take over the market at this point. So if we finally see a breakout retest of structure and we join the bullish momentum, I'm going to be advising us that as soon as price action gets into that trend line, we move all stop losses to break even, as we want to see how price action will be reacting to that descending trend line. As it depends on what happens here, will determine if we are going to be adding more buy position or get ready to sell the GBPUSD. So if we see price action continue to find selling pressure below the trend line, we will have no choice than to look out for selling opportunities to join the decline to the downside. But if price breaks out of the trend line, then we are going to be looking out for buying opportunities at the retest of structure to add more position to the existing buy position, which will be running at that point in time. So let's keep this in mind. That trend line is very, very important. Let's mark those levels out on our chart. Then if the bullish momentum continues to the upside, this current market structure is giving us a privilege of maximizing this move, as we have structures like the 1.2700 level. If it is broken to the upside, we definitely want to be adding more position. But if price action begins to find selling pressure around here, we would have no choice than to look out for selling opportunities. Remember, this structure was broken to the downside yesterday, and there is a likelihood that we could have a retest of structure here to push price to the downside. So we want to keep that in mind. But if a breakout happens, we want to add more positions. We also have structures at the 1.27250 level and the 1.27500 area to maximize the potential of this move if price action ever breaks out of this area. So that is how we are going to be buying the GBPUSD for today. However, if this candle that we see here turns out to be a shooting star candle and instead price action continues to drop to the downside, then we might likely be seeing this old range that we have here evolve back into a trend continuation pattern, probably in the form of a bearish rectangle or a pennant, where, remember, I have this trend line here. Remember, we had a higher low, so we had a trend line at this point, so we could capture a selling opportunity if price action ever breaks down the trend line, retest of structure, then a sell stop order below the 1.26100 level, which happens to be the lowest point price action has been for this week, to maximize the potential of the bearish move to the downside. So you can see how important this current structure is right now. So we have the 1.265, which you want to mark out on your chart, which will be guiding us to buy the GBPUSD if price action breaks out of that level, while we have this trend line and the 1.26100 area, which will be a yardstick to guide selling opportunities in this market. So you want to mark these levels out on your chart so that you can use this as a reference point to guide your trading activity for today. So these are my views on the GBPUSD for today. Very, very simple setup. So all you just need to do is mark these levels out and wait patiently for our structures to mature before opening any position on this instrument. So if you have any questions, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds to see if there are any questions before I move on to the next instrument. And you can also use that time to quickly mark out these levels on your chart, or probably screenshot my screen if you want to, so that you can use them as a reference point when you're about to make your independent decisions. Okay, 8726, good morning. Costas GR, good morning to you. All right, so in the absence of no questions, I want to assume that we're on the same page here. So I will be moving on to the next instrument on our watch list. And the next instrument we are going to be taking on today is the XAUUSD. Now, on the XAUUSD, we have quite an interesting situation here. Since the beginning of the week, we have been selling this commodity. As you all know, price action has been trading below our key level at the 1,935 level. And at the beginning of the week, we also acknowledged these higher lows that was spotted since Friday's trading session of last week, and we agreed here that if price remains above that trend line, we are going to be buying, but if price drops below the trend line, we are going to be looking forward to selling opportunities. And in fact, we saw the breakdown of the structure during the New York session on Monday. Price action came back to retest the structure later on Tuesday, with continued selling pressure around this area, giving us the idea that price might likely be going bearish for this week. And as a result of these structures we identified, we took advantage of a bearish opportunity right below the $1,928.50 level, and since then we saw how price action had moved over 250 pips in profit. And we also had the privilege of adding more positions at the breakdown of this 1,922, and if we had that one to it, if you had the position triggered, you would have over 190 pips in profit. So close to 400 pips was what we were able to scoop during the first half of the week. And yesterday as well, we had the privilege of joining more positions at this point as price moved about 80 pips before we begin to see the buy pressure resume in this particular market. So at this point in time, is either you have taken your profit on this one, or you currently have a sell position running at this point. And if you do have a sell position running, it is quite reasonable that you move all stop losses right now to secure the current position, as it appears that we're beginning to see some new evolution of price movement at this particular point in time. So going into the New York session today, what is going to be our plans? Well, the first thing I was able to see this morning while I was trying to decipher what is likely going to happen today, the first structure I was able to spot here is this trend line. and it has been a major determinant of price action since the beginning of this week. So it was initially an area where buy pressure was resuming. As you can see here, we saw buy pressure, we saw sharp rejections, we saw another one here before we finally saw the breakdown of the structure here on Tuesday. Then since then, price action has been trading below that trend line, where sellers has been using it to guide a trend continuation to the downside. And right now, price action is gradually approaching it, not even if not right on it right now. And as you can see, this is a very, very significant line that we are going to be using to guide our trading activity for today. And you know how we use our trend lines here in this community. As long as price remain below this trend line, this descending trend line, we would have no other choice than to look out for selling opportunities. But if price breaks out of this trend line, which is very, very likely based on this current structure, then we shall be getting ready to buy the XAUUSD. Then in addition to this trend line, one more thing I saw here that is very, very emphatic, and that could be a determinant of price movement for today, is the fact that we saw how price action has been, the character of price action between the $1,905.50 level and the $1,902.50 area. If you look at this closely, you will see signs that buyers are around that area, which further reveals how sellers has been struggling to break through this level despite the lower highs we have been witnessing since the beginning of the week. Now, if you look at what happened here, during the New York session yesterday, we saw the sharp rejection, that candle giving us something that looks like a hammer candle, which from a technical standpoint is a sign that reveals the presence of buyers within a particular zone. Then if we look at what has been happening here during the early hours of today, we saw also sharp rejection within that area between the 1,905 and the 1,902, which further reveals the presence of buyers at this point. And with the situation we have here, it is quite reasonable that we remain patient of jumping into any sell position at this point, as we can see how sellers have been struggling to make a statement around this point. And for me, I'm of the opinion that the buy pressure we've been witnessing here is likely going to be inciting a breakout of that trend line that we identify here. And one thing about the trend line that we identified here is the fact that it also shares a confluence with that 1,910 level. So what I'm going to be looking out for here is a breakout retest of the 1,910 and this trend line for an opportunity to buy the XAUUSD. As a breakout of these two structures will now confirm that we now have a reversal pattern on our books. So that is how I'm going to be buying the XAUUSD today. So you want to mark these levels out on your chart. So right above the 1,910 and this trend line is an area we shall be looking out for buying opportunity, while we also look out for more opportunities to maximize this move at the breakout of the $1,913.50 level to join the price to the upside. Then there is one thing that is likely going to happen today along this trend line. As you can see, price is right along that trend line. We could still see some scenarios like price action retracing back a little bit to the downside before it finally breaks out of that structure. So if I see something like this, I will be getting ready to buy even before the breakout of the 1,910 happens. Now, if I bring out my line chart here, I'm beginning to see that we have a trend line that we can bring out from the higher lows identified here, so we can use that also to guide our trading activity for today. So what I simply mean here is that we could still have a situation where price could still drop back into the structure, and the appearance of buy pressure will definitely give us the comfort of even buying before we can now buy above the 1,910 and buy again above the 1,913, hereby helping us to maximize the potential of this move to the upside. So this is how we are going to be managing this buy position on the XAUUSD for today. So you want to mark these levels out on your chart, and let's use it as a reference point to guide trading activities for today. So that is that on buying the XAUUSD. But if it so happens that sellers now try to take over the market considering the strong bearish momentum we have been witnessing since the beginning of the week? Well, for me to sell the XAUUSD at this juncture, I would need a significant confirmation to join that move, and one of these is a breakthrough of this buy zone that we've noticed here. You can see we have been seeing some accumulation around this area where participants have been accumulating some buy positions around here. So for me to sell, I would want to see a breakthrough of this zone by price action, giving me a clue that buyers have lost that momentum. Then retest of structure will further give us a confirmation to join a bearish move. So if I don't see a breakthrough of this zone between the 1,905 and the 1,902, I wouldn't be considering selling the XAUUSD today. So let's see how price action play out around this area in the next couple of hours. Please, let's ensure that our structures mature before we jump in. Don't let emotions drive our decisions here. We've finally seen price close along this area, so we have a bullish engulfing candle, which is a good sign that buyers are getting stronger at this particular point in time. And remember, I said we are going to be looking forward to a breakout retest for us to join this bullish move. But if you are very profitable this week, if you have been part of the bearish momentum we have been enjoying since the beginning of the week, then you are very, very profitable. So you can still leverage on the profit you have made so far this week to capitalize and testing the waters around the 1,910 to capture that move to the upside. So if you are profitable, you could have a buy stop order above the 1,910 to capture that bullish move to the upside. So let's keep this in mind. Let's continue to monitor price action and be on standby to capitalize on whatever momentum comes out from this current structure. So if you have any questions regarding what I just explained, feel free to let me know in the comment section. And of course, you want to be marking these levels out on your charts. You don't want to miss out on this opportunity. Mark them out, screenshot my screen so that you can use them as a reference point to guide your trading activity for today. So I will be taking the next 10 to 15 seconds to read through the All right, so in the absence of no questions, I want to assume that we're on the same page here. So we shall be moving into the last instrument for today, which is the USDJPY. So let's run through the USDJPY quickly. All right, so on the USDJPY, we had a very interesting position and we have been quite profitable since the beginning of the week. We have been buying the USDJPY. Remember, we identified a range where price action was trading between the 143.750 at the beginning of the week and the 143.250 area, which further emphasized the level of indecision at that point. Then during our live session on Monday, we acknowledged that there is a likelihood that price action could gain momentum after noticing the sharp rejection of this structure around the 143.100 area. And what we said here on Monday was that let us remain patient and wait for the breakout of the 143.450 before considering buying the USDJPY with a stop loss sitting somewhere around the 143.250. And as you can see, since that moment, we had our buy position triggered and price action since that moment has been climbing and finding higher highs. Now for that first position, we have price action move over 120 pips in our favor before we started seeing this old bearish momentum happen. Remember, we also added more position at the 143.750. That one also moved about 90 pips in our favor. Then we also had more position at the breakout of the key level had the 143.900, giving us about 70 pips. And we also added more position, had the breakout of the 144.150, giving us about 50 pips before we saw this bearish move to the downside. So it has been quite a very profitable position for us on the USDJPY, and at this point in time, if you had moved your stop loss accordingly, you should be taking out of your positions at this particular point in time. So currently we don't have any positions running on the USDJPY. Now, with the situation we have here, what is going to be our plans for today? Now, for those who still have a buy position at this point, I'm going to be advising you to move all stop losses, secure position, or even get out of any trade at this point, as anything could happen from this current area. Now, going into the New York session today, what is going to be our plans and what are we going to be looking out for to maximize any opportunity in this market? Now, look at the situation we have here since the beginning of the week. Remember, we have a couple of trend lines which has been guiding this bullish momentum since the beginning of the week, as you can see here. And you know how we use our trend lines in this community. As long as price action remains above our trend line, we shall feel comfortable in a buy position, while we also look out for more opportunities to buy. However, something interesting has been going on here in the last 24 hours, I think about 20 hours now, and that is the fact that as soon as price action got into that zone between the 144.700 and the 144.600, we have seen how buyers have been finding it difficult to break through that structure. And this is a clear sign that sellers are pushing in to negate that bullish attempt around that area. And as a result of this attempt by the sellers, we have a new structure in the form of a range where price action has been caught within, and that is between the 144.700 and the 144.150. And with this kind of situation here, it is quite clear that we have a level of indecision ongoing in the market at this point, as whenever we have this kind of situation, it is quite possible that market participants are looking forward to a catalyst that will give momentum to drive price movement. And for the fact that we have a major event coming up today, remember we checked the economic calendar and we saw that we have a GDP data analyzed for Q1 coming up in about 1 hour from now. I'm of the opinion that participants are looking forward to this event. And remember, today also from the Japanese economy, we are going to be looking forward to the consumer price index, which is another high impact event, though this is going to be coming up much more later in the day, hereby giving us an insight into the possibility that we could still have a consolidation phase go until the later part of the day. So now with this high impact event we are looking forward to, it is quite clear that participants are still unsure of what might likely happen. So with the situation we have here, I have two structures that we are going to be using to guide trading activity. Now, one of these structures is this trend line, which happens to have been broken and retested here. So we already have a breakdown of that trend line. And remember, we still have another trend line here, which shares a confluence with the 144.150. So we still keep our bullish bias open as long as price remain above these trend lines. Now, with the situation here, if price action breaks down the 144.150, which also shares a confluence with this trend line, then at this point, we will start considering selling the USDJPY. Now, a breakdown of this structure, retest will be what we are going to be looking out for. So once we have a breakdown, we scale down into our lower time frame, look out for retest of structure to be able to join the bearish move to the downside. And we have a key level here at the 143.900 area, where the breakdown retest of the structure will definitely welcome more opportunities to maximize the potential of this move. So let's mark these levels out and consider taking advantage of it when price action moves into this area. Now, with this information we have here, with the bear expectation below the 144.150, we cannot ignore the potentials of buyers. So as long as price action remains above this 144.150 and the trend lines we identified earlier, the chances of buyers are still very, very possible in this market. So personally, I have a buy stop order sitting above the 144.700 to capture the trend continuation to the upside. So I'm going to be looking forward to price breaking out of the 144, taking out all the sell positions there to give me an opportunity to join a bullish momentum. However, if you look at the structure here and looking at the distance between where price action is at this point and that resistance line, you will see that we have roughly 50 pips to catch on that one. So are we going to miss out on this 50 pips move before the breakout finally happen? Of course, no. We want to ensure that we maximize this move. So we are going to be looking out for structures to even join or buy even before the breakout of the 144.700 happens. And to do that, what are we going to be using to guide our trading activity for today? So I have a structure here along the 144.400, which we are going to be using to capture any bullish move here. And one fact about the 144.400 is the fact that it shares a confluence with that bullish trend line we identified earlier. So you want to be marking this level out on your chart. So we have 144.400, mark it out on your chart right now. And then I would like to give this a red color, okay, something like this. And one thing I'm going to be looking out for is a breakout of the structure. Now look at how it shares the confluence with that trend line that we have there. So if price action breaks out of the 144.400, it would have also broken out of the trend line where it is considered to be bias territory from the structure. Then we look out for more opportunities at the breakout of the 144.700 to maximize that move. So please note this: if this does not happen, we are not buying the USDJPY. So we have the 144.400 marked out on our chart. We are only buying if price action breaks out of and retests the structure today. If this does not happen, we are not buying. Please take note. Then we also have the privilege here. Remember, I told you the 144.150, which is where we are going to be looking out for selling opportunities here. And I told you we are going to be looking forward to a breakdown. We're going to be looking out for retest. We are not having a sell stop order here. We look out for breakdown first of all, wait for retest of structure on our lower time frame, after which we want to be joining that bearish move to the downside. So this is how we are going to be managing our positions on the USD JPY for today. So mark these levels out on your chart. I will be giving the next 10 to 15 seconds so that you can do that quickly. I'm already out of time. It's I'm 12 minutes off time at this point. So let's see, 10 15 minutes 15 seconds to mark out these levels, and then I will just draw the curtain here and call it a day. All right, so I hope you've marked out these levels, and let's just wait patiently for structures to mature before joining any potential move. And for those who have existing position on all the instrument we reviewed today, please ensure that you've moved your stop losses to secure position. We are likely going to be having some volatility in the market as we gradually approach the GDP index, which is coming up in about 40 minutes or so from now. Secure your positions and let's be patient and wait for structures to mature, just as we have illustrated during the course of this live session. And for those who joined us for the first time, you are welcome. I hope you are able to gain one or two things from what we discussed today. And trust me, the more time you spend with us, the more you'll be able to eventually use this information to guide yourself in making your independent decisions on your account. So on this note, I wish you all best of luck today. And to my Muslim brothers and sisters, Adha al-Adha to you guys. I hope you are having a wonderful season out there. More blessings and grace to you and your families. So do have a wonderful and beautiful evening, and I hope to see you guys tomorrow again, same time, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the instrument we have been monitoring this week has been doing, and at the same time get ready for the last trading day for the week. Do have a wonderful evening, everyone. Bye-bye.